presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom. How are you, man?
I'm doing great, man. Yourself?
Good. It is a treasure to have TFNN every hour during the trading day, to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling with us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Be impeccable with your word. Release the need to be right. When you believe something, you assume you're always right. And you may even destroy relationships in order to defend your position. Let go of the need to defend your position. Market-wise, let's take a look at it out here. We have the Dow Industrials up 38, NASDAQ down 27, S&P's off 8.5. Gold contract down $23, traded at $2,346 an ounce. We have silver down at $1.12, $29.65 an ounce. Copper down 12 pennies at $4.54 a pound. Light sweet crude off 82 cents, $73.40 a barrel. Notes and bonds. 10-year note up 14 ticks, trading 110 flat. 30-year up 31 ticks, 32 equals 1 point, folks. 118.19 and King Dollar. King Dollar right now trading down 6 ticks, 104, 133. Euro at 108. Yen trading out here at a price point of 154 in the British pound, 127 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. Last Friday, high volume, low. My take, we're going to go after it. You can see the market's struggling, folks. And this is, you know, in particular, we have a time ratio here that you can go a lot lower. You have the high volume, low. So, number one, that high volume low, to me, we're going to get tested. You know, we had the high volume low. Yeah, it was rebalancing, but the bottom line is that wherever the volume goes, that's where it ends up going. I remember when WorldCom, all these guys were, you know, going BK. They went down dramatically. The market was still up. Guess what? We went down dramatically. Bottom line, on the SPY, that's 518. Right now, you're at 527. We had done 90 million shares there yesterday. You've gone to a higher high, 46 million. Today you're at 23. We're only going to do like 33. You're not going to hit the high. Same thing in the Qs. We take a look at the Qs. Same setup with the Qs. We have with the Qs out here. You're up 10 cents right now. We had hit on the Qs 443. You're at 453. We had done volume of 55 million. Yesterday you did 32. And today we're not even going to do 32. That's a market that wants lower price. Gold. We take a look at the gold contract out here. Gold's holding the bottom of its range right now. And, you know, they're killing some of these equities, but that's what they do with gold. You can see, okay, we've done 163,000 contracts. You're down $22, and we've done a lot more than this. We're coming into the bottom of consolidation. Bottom line, the bottom of consolidation is, you know, the bottom of the consolidation is actually 2,308, and we've hit 2,335 thus far. We go to the GDX. Let's just take a look at the GDX. You're going to see some volume here, but you're going into volume also. So in the GDX, you get 23 million. Bottom line is that when you bring this here, let me put this on a weekly first. You put this up, and what you're going to see, bottom line, you're coming into huge volume, man. On the weeklies, even at 32,098, we had 180 million shares traded. So that's going to be hard to break down. This is still building cause for higher price. The note and bond market, that's basically higher prices, lower yield. That's where this is coming from. And, you know, it's got to go. And it came down. It came down into strength, going up 2.1 million contracts, big contract volume. Bottom line, this is ready to break the last swing high, which is the 110.09. Right now we're at 110. And that thing wants to go a lot higher. And then we go to the dollar. We take a look at the dollar. This dollar is going to get interesting here. The reason it's going to get so interesting is that it keeps popping in the higher range. What it did out here today, however, is that we're only down 11 ticks. But this does look to me that we finally may get to lower price. Now, what is wild is that you're getting to lower price in the context of a market that still wants lower price. So we'll see where the whole thing goes. I got to show you this video, folks. So over the weekend, Bridget and I, we went out to the Grand Tetons and Yellowstone. So check this out, man. This is crazy. You're gonna see. This is. Let me put this up. This is me jumping off. At the Grand Tetons, rendezvous point is 10,900 feet. So I'm paragliding. Wait till you see this. This, folks, if you ever get a chance to paraglide, do it, period. Don't, just do it. This day here was incredible. The ride was incredible. It was like 20 minutes on the way down. You'll see, you jump right off the mountain. You just straight right out, and then you are in heaven. I mean, you're talking about just incredible type of ride, and it's like you can do it longer than 20. This guy did it 20 minutes, and you land. You know, these people know what they're doing. That's the real bottom line. You land, and it's well, in my case, it was really safe. And the beauty of being up in the air, like. Is something I always want to do. I've dreamed so many times in my sleep of flying, but this is the real deal, man. And you can see all the snow at the top of the mountains. It was actually snowing. Well, it was flurrying. We were up there, and people were still skiing. People were still skiing at the top part of the mountain. There's a tramway that takes you up, and you know, bottom line is that you can either in the summer, which you come down the tram again, or if you're skiing, you ski halfway down, then you got to go back up, and you'll see this. You disappear for a second. Oh, okay, that's it. Anyway, trust me, do it if you can, because it was unbelievable. Yes, and there's no doubt. What I found, Peter from Park City saying that, I love Jackson and the Tetons. What I actually found out is that, hi, Wyoming, how you doing, man? Is that it seemed that the Grand Tetons are even better than Yellowstone. We saw the guys, but the Grand Tetons, man, oh my God, just unbelievable. Dow's up 68, NASDAQ is down 11, S&Ps are off 3. Stay right there, folks. Got our man, Mr. Basil Chapman, coming right up.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 92, NASDAQ is up 2, S&P's up flat. Let's get over to our man, Mr. Basil Chapman, as we do each and every Tuesday. And don't forget, folks, Basil has an outstanding show here every trading day, 10 to 11 Eastern Standard Time. Also has a great newsletter, The Opening Call. Now, it's very easy to get The Opening Call, folks. Come over to our website at TFNN. See right under newsletters is on the left-hand side. You just hit The Opening Call. You hit that subscribe button. You can get The Opening Call for 1 month for $149, 6 months for $695, which is a savings of $190, 22%, and 1 full year for $11.95, which is a savings of $593, or 33%. Now, they all come with a 30-day money-back guarantee. Basil has an outstanding newsletter, has about 12 archives on there, so you can go through the archives and really understand how Basil looks at the market, how the Chapman wave rides this market, up and down. Basil Chapman, what's going on?
That looked fantastic.
Oh, man, Basil, I had such a blast. It was unbelievable. I've already hunted. As soon as I come home, I'm hunting every other place where I can do this. There's only one other place that is higher than that, somewhere in India for 13,000 feet where you can jump off. It was crazy. It was just, and it was peaceful. Oh my God, it was so peaceful.
Well, it must be very quiet. Yes,
it was.
And so is there a certain time allotment? In other words, they can, because of the wind, they know the weather so well that they can guide you for longer, or is
they
it
do. The thermals, they know the thermals upside down, and they could do it for an hour. You know, they think it's a 20-minute deal because it's a business. Do you know what I'm saying?
Right.
But
right.
yeah, they can stay up there for quite a while. I mean, he saw a badger on the side of the mountain, right at the very top, and we were going down, and he brought me all the way back up, and we went right into the side of the badger, and the badger's up like this. Like, okay, start hissing at us. It was amazing, man. It was just crazy. It was so we hit the weather beyond belief. So, all in all, majestic for sure. Yeah,
that's fantastic.
Yeah,
great. Congratulations.
So, thank you. What are we looking at?
Market-wise, talking about the conditions, weather conditions. If you're looking at this Dow chart on the left, so on the left is the Dow daily chart, in the middle is the weekly, and on the right is the monthly. Now, we've finished the month of May. We finished the month of May, and what we're looking at here is, let me just move this away. I'll put this as a one-to-one expansion, so I'll just take it away for the moment. You see this candle, this is called a Chapman wave inverted green Roman candle. A very long wick. The body in this case, the body is a half to 2/3 of the way down, and there's a tiny little wick at the very bottom. So the rule of thumb, whether or not I just discussed this, I mentioned this with my subscribers this morning about this particular red one on the daily chart, but the principle is the same, that if on a shorter time frame, the Dow is able to hold, in this case, I'm going to make it about 2 or 3 days. If for 2 or 3 days, the Dow is able to close maybe 2 out of 3 sessions above 39,300 in the month of June, there's a real good chance that in this month we'll go to the very top, and that's at 40,077. If it closes below the low of this past month, and that'll be at that 37,000. I believe it's the 37,000. Let me just check. I want to get the right month. Yes, 37,780. It says that you've got to be careful because now you've got a strong resistance at this particular point where this is where it closed, and it closed at 38,780. So that's that thing for the monthly chart using Chapman wave. In the weekly chart, we've got a U-shaped pattern that's now into the second part of a U. So it's a W formation. So basically, I look at this as a rectangle. Now, I've had a number of webinars. I discussed the narrow rectangle, the large rectangle, the one that does exactly this, where it goes into a lowercase w or an M-shaped formation. So that's where we are right now. We're not in the middle, but close to the middle of the range. Now, the daily chart, and we were very fortunate using the Chapman wave. You know, when you get to a leg D in the Dow, we almost always start to look for some kind of insurance policy. We either, if we're long, we want to start a short position. Anyway, we shorted right there at the exact high of on the 20th of May at 40,077. So this is very interesting because we came down. Another technique that I use is round numbers. Wouldn't you have thought that the Dow at 38,000 could make a round number low? It was 38,000.87 or something like that. It's virtual 38,000. So I said to subscribers, let's take some profits here because I'm anticipating that was Thursday. We could have a bounce. So we had that big bounce. We had this Chapman wave Roman candle. So far it hasn't gone. It went to the midpoint of this wick today, but is up in the higher range. So that negates it to a certain extent. So I'm looking at this for the Dow. There's a consolidation going on, and it's a rotational correction. So that there are one or two, for instance, we still have our Microsoft from way back at 338. It's trading at 414. It's just stuck in this upper range. But in fact, a lot of Dow stocks have really taken a beating. So it means that fewer and fewer are holding the fort right now. So I'm looking at this and I'm saying, I believe the consolidation is going to continue for a little while longer. And we're staying with our long-term long positions we've got, but our short-term position, short, we're going to stay with. Now, this is going to be very interesting because the semiconductors, as I always like to say, they kind of lead us up and they lead us down. Well, they're holding near the highs, all-time high of 250.85. But even with NVIDIA and all the talk and everything, the semiconductors have stalled. They haven't broken down. The 9 is still over the 14. So we have a short position in the semiconductors. But I think that this is part of this whole rotation that I'm talking about right now. So that even within the semiconductors, there are one or two down. Fewer and fewer are holding the fort. So I think there's a digestive phase that's really important. I think it needs to unfold so we can get a much bigger move later in the summer. So that's the semiconductors. Now, what I think is also quite important at this particular stage is we've had the AIQ, which is this is the ETF, the Global X Artificial Intelligence ETF. We've had it for quite some time right here. This is the weekly chart way back here in 2023. We've still got this position, taking little bits off to take a profit, but it is starting to stall. And this chart, the sideways action, again, a rectangle formation. And if you look at Microsoft, also in the AI area, look at this, same thing, sideways. If you look at the semiconductors on a weekly basis, look at this. It's gone to the top, and now it's kind of having a high-level consolidation. So at this particular point, I'm not looking at this as like a smash to the downside. I think it's rotational, and it's just picking off one by one. For instance, the IWM, which is the Russell 2000, was doing really nicely, and now it's starting to slip. So I think one by one, we're seeing the Dow has been taking a breather. The semiconductors now looks like it's in the process. The IWM did very well. Now I think it's in this process. So I think what we're looking at is one by one, they're just starting to see some kind of weakness. And the daily charts are the ones that are worrying me. But the weekly charts, they've still got some room to go because they're holding much, much better. So it's step by step. We've raised cash. I like the fact that we've got cash because it really puts us in a good position, I think, for this next move that I think is coming up in June.
Well, if the SMHs give it up, it's all over, man.
then it's a problem, for sure. That's the reason why I've been very cautious. Yes.
Totally. Listen, folks, it's very easy to get Basil's newsletter. Come over to our website at TFNN. You're going to see newsletters right in the top. Hit that. It's on the left-hand side, the opening call. You'll be very happy you did. Basil, you have a great one, safe one, and we look forward to the show tomorrow.
Thank you, Tom. You too.
Okay. Stay right there, folks. Come right back with Mr. Our man, Mr. Tim Wood.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Tigers, you've seen his show, you've learned from his webinars, and now it's time to trade side by side with him. Join Larry Pesavento for the second month of his new service, Live Trading Fridays. Hosted in the Tigers Den trading room on Discord, Larry has analyzed a number of commodities and indices, placed profitable trades, and explained his method. Whether you're new to trading or are a seasoned market veteran, trading side by side with a titan like Larry Pesavento will only enhance your game. Utilizing Fibonacci retracements and ABCD structures, Larry provides decades of insight into when to place trades, when to exit, when to ignore, and so much more. Learning is doing. So if you're serious about learning technical analysis and becoming profitable in this uncertain market, Live Trading Fridays is a must-have tool in your arsenal. Live Trading Fridays occur every second and fourth Friday of the month, so trading events for this month are May 10th and 24th. If you're serious about trading, we'll see you there. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Dow Industrials up 77, Nasdaq's down 2, S&Ps are off 1.5. Let's get over to our man, Mr. Tim Wood, as we do every Tuesday and Thursday. And don't forget, folks, you can reach Tim every trading day at ord-oracle.com. That's ord-oracle.com. Tim Ord, what's going on, brother?
Well, let's take a look at the S&Ps.
Okay.
And just a quick look. It's kind of a short view anyhow. The first chart is it's a monthly chart of the SPX VIX ratio, and the month ended Friday. May ended Friday, so I'm kind of looking at the month and see where everything is. And anyhow, the bottom window is the SPX VIX ratio, and the window above that is the monthly SPX. So anyhow, in a nutshell, when the SPX makes a higher high and the SPX VIX ratio makes a lower high, that's a negative divergence. A lot of times that comes at near midterm highs, since it's a monthly chart. And the pink areas, kind of shaded pink areas, are times when the SPX made a higher high and the SPX VIX ratio made a lower high.
I see.
And so right now, the S&P's made a higher high during May, and the VIX, SPX VIX ratio also made a higher high. So intermediate term wise, we're not seeing any divergence on the VIX. And so I think the uptrend is still intact. Back in April, we talked about where the candlestick pattern closes halfway above the upper Bollinger Band, warning that you're going to have a consolidation. Well,
yes.
The consolidation happened in May, and no, wait a minute. See, that was back in March, I guess, and that predicted a kind of a down April, which we did have. And May was an up month. But anyhow, the sideways move that's been going on for the last 3 months, we think we're probably going to start breaking out to the upside, is my point. So uptrend and start. When you can take a closer look at what's going on right now, we turn to chart 2.
Okay.
I
have it.
Unless you got a question.
No. Well, I know that, Friday, your expectation is that that's a selling climax, right, with that high volume low. Is that correct?
Yeah.
Okay.
Friday, okay. We're talking about the daily.
Yes.
Yeah, the frying, because this went right into the close, and all of a sudden you had an explosion of volume. You had this big rally.
Right.
And the day before, Thursday, we went and finally closed that gap of, I think it was May 10th. We had a gap there. We gapped above some previous highs of late March, early April. We gapped above it. We came down, filled the gap on lighter volume. If you do a volume study, it was 10% lighter. Actually, it's more than that. Then Friday, you get all these weird moves on Friday. That's why I think Friday is a good day to trade, especially if you're down in a bull market. But anyhow, I think in general we're holding above the previous highs of April, which is around that. This is the SPY is around 525 range. We're holding above it. We're kind of building cause here, I think, to move higher. Then I have a couple of trend readings on that chart too. Last Thursday we closed at 1.31.
Yes.
And yesterday we closed at 1.31. So you really want panic, and a trend reading above 1.2 shows there's panic. So you kind of have confidence that the panic was starting to form right around that 525 area on the SPYs, and we kind of rallied up a little bit yesterday. Volume didn't really go with it, so I don't know. And then today we're kind of an inside day so far, but I think we got enough panic to move the market higher. It's just kind of taking this time. And so, this consolidation could maybe last a little longer. I don't know, but I don't think there's any top of any consequence is making here because of chart on page 1. Because on the monthly chart, the SPX VIX ratio is not showing any divergence whatsoever. And right now you're starting to get a little panic in that trend. And panic only panic comes at bottom, so you get a little panic. So there's not a top of here of any consequence. Not saying today or tomorrow or even this week's going to be an up week, but most likely you're going to find support around that 525 area. So
yes, and when we look,
there's Go ahead, I'm sorry.
No, as you're educating all the tigers and tigresses, it's pretty cool because I jumped behind the desk and the first thing that a couple of tigers were saying, hey, Tom, the 2-day trend is running 3.3 right now because we had a 1.5 and a 1.76 yesterday. Closing trends, this is. Meaning the arms. I'm sorry, sir. Yeah.
Yeah. So, good. Because, you get panic. The panic is good if you're looking for a low. So, if you don't get panic, then you're not seeing the low. So, but, the trend readings are showing there is a support where that gap is or in that vicinity. So, that's a good deal.
Nice.
So, you want to move on?
Yes, sir. I'm at the next one right now, number 3.
All right. Chart 3. Okay. This is a monthly chart. We talked about this in depth over most of month of May, and I wanted to see these indicators close above the mid Bollinger Band to show the momentum has turned up, and it has. On a monthly chart, you very seldom get whipped around. You can. Matter of fact, there's a big whip back in 2023 on this indicator because it actually. At least one of them did get above mid-Bollinger Band, then fell back down. But in most part, once you're above the mid-Bollinger Band, if you go back and look, going back to 2007, you stay above the Bollinger Band. Once you're below it, you're usually below it. Not so much with the GDX-GLD ratio on the monthly time frame because it kind of was back and forth. But the monthly up-down volume, which is the bottom window, and the monthly advanced decline, once you get above the mid-Bollinger Band, it usually stays there and stays there for a long time. Anyhow, in a nutshell, month of May closed on Friday, May 31st, and both those bands, or both those indicators, the bottom window and the second window up, which is advanced decline and up-down volume, both closed above the mid-Bollinger Band. And once that happens, usually, not saying every week's going to be an up week, but in general, you have now started to trend up that in the past has lasted at least a year and a half, and some as long as 4 years. So a major up move, I think, has begun, and this major bottom formed back in, I think it was October of 2023, that was the bottom, but it didn't. This indicator doesn't try to pick the bottom; it tries to catch the move, the major move, the trend of the market, and that's what these two indicators are good for.
Yes, and Tim, it's ironic that it happens there, and they're smoking the golds out here today. I actually bought a gold this morning, but I was cracking up like, oh my God, we finally made it, because I was out in the middle of Yellowstone. We were talking earlier, and I knew, I was watching, I said, oh man, God, this is awesome, it's going to close above it, and bottom line, we pull it back. But that, folks, that's what gold stocks do. Stay right there, Tim and I come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Tim Wood, Tom O'Brien. We do appreciate you growling and prowling with us out here. We have the Dow up 106. NASDAQ is up 2. S&P's flat. We are talking markets with our man, Mr. Tim Ord. And, Tim, I have the third chart up right here.
Yeah, anyhow, so the monthly charts flip to a buy signal, and I'm assuming we'll have another chart later on to look at to help confirm this chart. But let's go look at the short term, see what's going on.
Okay.
So let's go to chart 4, and the bottom window works the best, and what it is the 50-day average of the up-down volume for GDX. And anything above zero, the market's in an uptrend. When it's below zero, the market's in a downtrend.
Yes.
And it's been above zero, I don't know, looks like beginning of April or so in that trend. And it's staying above zero. So we're about 15 right now. So this is kind of an intermediate term chart. 50 days is about 2.5 months, give or take. So the kind of an intermediate term trend is staying strong, too. It's up, hanging around 15 over the last couple of weeks. So this takes out all that noise in the market. If this indicator starts going down when the GDX is going up, that's usually a bad sign. That's not even doing that. It's just staying around that plus 15. And this is current reading. Even though the market's off on GDX here, close to 4%, it's not really affecting this chart. So let's look at even a shorter term chart. Let's go to chart 5.
Yes, and I just want to fill in here because there is no doubt, folks, okay, that these gold and silvers are getting stronger. Just as Tim said, yeah, we're back down today. But when they stop moving, man, if you get gold stocks are a little bit different than silver stocks, but when they move, man, they move. And you can see it, Tim, the last 2 weeks, man. I mean, it was just a different type of movement, meaning really move, Okay, so I got the next chart up here.
Actually, go back to chart 4 real quick.
Okay.
The top window is GDX, and I think the head and shoulders bottom's forming there. And this, if you do the measures on it, comes around $50 on this head and shoulders. That doesn't mean it has to happen anytime soon, but that's a major target. But I draw a neckline there. So, in my opinion, you had a sign of strength through the neckline. That neckline comes in around eyeball around 33, 34. So that's probably about the worst scenario you're going to get. And we're GDX right now is right around 34. So you're probably closer to a low than a high. And this chart with the internal still remaining strong, so this is not a top of any consequence. So, okay, now let's flip to chart 5.
Okay.
And so this chart, now this is, the previous chart was there was a 50-day average, was about 2.5 months. This is an 18-day average. Kind of works the same way. You get divergences going on, and we don't have really any divergences here. But even though the market's down, and these were current when I sent this chart, so we're not even near minus 10. To explain, the bottom window is the 18-day average of the up-down volume, and it needs to stay above minus 10. And the next window up is the GDX Advanced Decline 18-day average, and it also needs to stay above minus 10. And we're coming in, when I drew the chart, one was about 8, and the other one was 5 plus 8. So we're staying above minus 10 on both of those charts. So even the short term still looks good here.
Yes.
So I don't know. We're probably, maybe testing the neckline of the Head and Shoulders bottom in this vicinity. Maybe we get down to 33. Maybe we don't. But anyhow, in this vicinity is probably where the low is going to form. If this was the top, we'd be down by minus 10 right now.
Yeah.
Before even that market even starts pulling back. We're not doing that. So I'm thinking, maybe a little mush in here, building cause, and then from there we'll probably go higher. So don't think of any top of any consequences forming here.
Nice. Okay.
So anyhow, the intermediate term trend, the short-term trend actually still look good. Things can change, but usually doesn't change that quickly. So I'm thinking in general we're still going to hold up, and I think the metals are actually going to weaken here, and I think because the GDX GLD ratio is starting to show strength, I think the metals may kind of falter here, and I think the stocks themselves, the gold stocks and silver stocks, are actually remain stable, if not rise, going forward here. So, but
that's about as deviant as it can get, right?
Yeah, it's really, because over the last several years, gold goes down. These gold stocks and silver stocks get decimated.
Yep.
So I'm thinking that whole character of the market is changing right now.
Right. No, listen, I can see it, particularly because, we got the buy on the monthly. It's a big deal, man. There's no doubt. And these ratios, folks, you got to pay attention to Tim's ratios, man. I mean, no one has them. Bottom line is that you'll see, how consistent they are. And the cool thing is, folks, if let's picture this if one doesn't work, that gives you just as much information on the other side, which is just so cool because it's so hard to, flip from particularly what we're talking about here. You're talking about a trend that has been down in the gold stock since 2020, maybe 2016 in some of them. You got the flip on the other side. We're in June of 2024, so it's really cool, Tim, no doubt, man. I just popped up the last chart, Tim.
Yeah, this is a real interesting chart. I wish I had data going back further, but it's not the case. Anyhow, the second window down from the top, which is all the colors on it,
yes,
is a bullish percent index for the Gold Miners Index / GDX.
Okay.
So this is another ratio. So, I was always trying to figure out trying to gather information on this. What I did find out, which I think is really important, anything above anyhow, is this a monthly chart or is this, no, this is a daily chart. So anyhow, the chart goes back to 2008, really when the data starts.
Okay.
But what's important about this chart is when the bullish percent index, the Gold Miners Index / GDX, stays above 2.25. We're at 2.51 right now, or 2.52. And it's very rare to get up there in that range. It always happens in major bull moves in the market, and that's the shaded green area on the GDX chart is when that happened. And we just started staying above 2.25 right now. So this indicator suggests something big is going on in the gold stocks, not necessarily gold, but gold stocks.
Yep.
It happened back in 2008. It didn't stay above it for some reason, but it did in 2016. That's where GDX basically doubled in that 1 year. The same thing happened in 2019. It basically doubled over the next year and a half on GDX. I think one went from 20 to 40. The other one went from 14 to 28, I think it was.
Yes.
So I'm thinking at least that's what's going to happen here over the next year, because these are big rallies when you get above 2.25. and we're above it right now.
And you
So
can
I'm
see this
thinking
very clearly, folks, very clearly on the chart that Tim just sent over. As Tim said, the 2008, yeah, it didn't hold much, but guess what? Those other two, they held in a big way. So make sure you check this out, folks. And you know that the bottom line is that the program's archived, okay? So if you're driving in your car, bottom line, you know, you can go through this whole thing tonight and, you know, study them, check them out so you can really understand them. Tim Ord, you have a great one, safe one. Of course, we look forward to having you on Thursday.
All right, see you, man.
Take
Have a
care.
good one.
Have a great one. Have a safe one. Stay right there, folks. We'll come right back.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee, so what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Dow's up 137, Nasdaq's up 28, S&Ps are up 7. So let's just take a look at, see how these volumes are holding out here. So you get the SPY. Yeah, not even close. 28 million, man. And it hasn't even hit the high yet. Well, the high of yesterday was 529.31. We hit 521, 529.15. So you get the contraction happening. NDX 100, 3 Qs. Same setup. You're up $1.25 in the Qs, 454. Yesterday you had volume of 32 million. Yeah, this one here, check this out, man. We're at 21. That is sick. That is a monster contraction. So we'll see where this whole thing shakes out. But bottom line is that I suspect we're going to go back down. We're going to test those high volume lows, and we'll see where it's at. You know what I can tell you, as I said at the beginning, the first update, is that in the time frame that we're here right now, this could get really dicey because the biggest downdrafts I've actually seen. You know, you have January, March. That was like the 2000 deal. In 1998, it was right here. It actually started in July. It went from July all the way to October. So I suspect what's going to happen is that we go after the high volume low, and at that particular point, that market is going to release more information. So we'll see where it shakes out. Because the first time down, and that's where I can picture that, you know, what's Tim saying, that's the climax also, because what ends up happening is that when you take a look at the market, you know, the bottom line, you came down the first day with big volume. You came down yesterday, and then it rejected, you know, the bar. Okay, we got down, if we look at the SPY, rejected the 522, ended up closing, you know, at 527. And, you know, today you could make the case, well, you couldn't make the case, it went to a lower low today. So, bottom line, you gotta love markets, man. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great night. Have a safe night. Come back and visit Tommy tomorrow morning. Kicks us off 9 a.m. Great show, folks. Go get him, folks.